securities, some look at asset tokenization. But I think this is a very interesting ongoing conversation. If Tencent and other solution providers are interested to take part, please do reach out to us. I mean, we do definitely want to grow this new sphere of retail CBDC development. But thanks for giving me the chance to share. We have a lot of exciting things we want to partner in the industry. Just on the point you touched upon on going global, thanks a lot for sharing. I mean, just the challenges and efforts you went through. 2 follow-up queries I wanted to clarify with you. And I think you probably, I mean, you guys had many problems solved, I think, in your journey. Was when you had to partner with different SMEs, whether on the supply side or demand side for solutions, did you have to sort of segment or cluster them into different customer base or different solution provider base, especially when global, because things are a bit different. And what were some of these potential different clusters you had to look at? And the second was, arising from this clustering, do you need to develop microservices? And this, I think, is a new emerging area globally also. So I would say hyper specialization, but specialization for specific clusters, so that you could have a generic tool set, but then a more microservices skill set to make the digitalization, to make the payments more seamless for them itself. I just wanted to hear your thoughts on that and whether that makes sense from your perspective.
Sure. Thank you very much for the question. First of all, let me echo a bit about what you just introduced. I think the initiative you have just introduced is indeed something we feel potentially we could contribute positively, right? And we are open to the idea to participate if MAS and the rest of the industry see the value from our side. You should have learned that a few days back, we just announced our partnership with AIEL, one of the institute and the US, and we are committed on a number of initiatives. One of the initiatives is on some of the study in the mid to long term regarding the digital service. So that's where we see, indeed, we are very positive and committed to join this thing. And then let me come back to the question you just raised. Right? Regarding the customer segmentation, of course, when we talk about SME, even if we talk about SME, right, SME itself has a lot of different segments, right? If we look at the industry perspective, there are different needs, right? Just now when I mentioned TME, that's one big segment, but not only that, our tailors, right? Our vendors. And we should also look at the size of the business. And the SME, within SME, there are still different, right? Like in China, when we talk about serving the rural areas, right, we introduced a program called We Come To, right, which actually bring the rural areas, the SME in this particular area, into a mobile app, so that they can easily reach out to big max to serve those people who work in move from their country, home town to the city, right? Then they need to have a strong connection with their home town. So that kind of things is not only unique, but also relevant to the rest of the world, at least part of the world. So that's where we see the segmentation happening. But how can we make it happen? Right? We don't think we can make it happen only by ourselves. Right? Look at the partners in the industry. The space is big enough. We should always work with them hand in hand. We stick to the infrastructure, right? We can bring the technologies, the infrastructure to the infrastructure. We call for the partnership with our potential friends, right, to do the necessary customization in different levels, whether it's in the industry level, whether it's in the country level, right, or whether it's in different the size of the partners level. It's all open. So that's what we feel is pretty particular question. Yeah.
Thank you. Thanks, Wen Hui. And I think you rightly put it that the rural example you shared was very heartening to hear. Often at times certain groups of SMEs or businesses are left out. And in fact, you put in programs to sort of bring them along with the rising tide of digitalization. I think that's very heartening and very inspiring. I think that leads us nicely to the next and final segment of this chat. Is the last 1.5 years have been quite a change, I think, for everyone. There's a common saying that goes around that because of what's been happening over the last 1.5 years, 10 years worth of digitalization has been compressed. So everyone is rapidly digitalizing, everyone's trying to get connected. But there's also a lot of structural shifts, right? Supply chains are being disrupted. People are looking for new partners. And I know Tencent itself is keen to internationalize, to go global. So happy to hear your thoughts, I think, from a future-looking perspective. Obviously, no one has a perfect crystal ball. No one is accurate. But, just seeing the trends that are happening now, as well as these rapid structural changes, from your perspective, from Tencent, what do you see is coming ahead and what should people look out for in the next couple of years? What skill sets are very important for them to build up, to be connected? And from a China SME perspective, or even global SME perspective, what is your hope for them? And where do you see, what would be a good end state, let's say in 3 to 5 years from now, that you feel everyone should be at?
Well, indeed, that's a very challenging question, right? So, as you mentioned, to talk about, we don't have a crystal ball. To talk about the future is sometimes it can be, but okay, let me try to share some of my thoughts on this particular topic. Right? First of all, of course, if you look back 10 years ago, I moved to this region about 10 years ago. By then, QR payment was still not yet, say if it's already started, it's not yet a phenomenal process, right? But for 10 years now, everyone feels comfortable with QR payment and the other digitalization services. So the same thing will happen, like afterwards, for the next 3, 5 years, or even 10 years. And with accelerated technologies, new ideas being introduced, such as topic we are talking about, like the metaverse right now, right? Like we talk about the AI, right? And we talk about big data. All those things certainly will change the future. Then, what are the few takeaways I personally believe? Well, the Olympics just passed, and the Winter Olympics comes soon, right? In a few months. So maybe I can just borrow the slogan and try to play with it. Let's say it will be faster. The digitalization for the next couple of years will be faster. The faster comes with the sense that more and more industry will benefit, right? And the speed of adaptation for digitalization, that's inevitable from my point of view, right? The second one is it will be higher. It will be higher in terms of penetration into the industry's whole value chain. So digitalization will not only happen on one single point, or it could start from one single point, but eventually it will penetrate the whole value chain. Right? As you mentioned earlier, the payment will be one of the areas started fast or earliest because it's easiest and the pain point looks the most obvious. But it will lead a chain of change afterwards. This is where I see so-called higher, the penetration of the digitalization will be. The third one will be stronger. What is stronger? Stronger, actually, my point of view is from the regulation. Because digitalization eventually will be one of the day-to-day for the whole industry. Then subsequently, the regulation certainly will be strong. It will come in many ways. right? When we talk about data privacy, right? Let's talk about the cyber security, right? And such others, right? And about how about the interoperability, right? All those things, of course, industry can start our own initiatives. But on the other hand, the public sector, right, certainly will play a role. And this will lead to the regulation stronger. Stronger not necessarily mean negative. Actually, from my point of view, it could be a very positive sign. It will set a clean framework for the industry to move in a very healthy way. And the last but not least, I think now we talk about together, right? The new, so introduced to Olympics together, is it? Yes.
Yes, it's the new one. Yeah.
Right, the new one. Because why we need to talk about the together? Because digitalization, my view, wouldn't be the privilege for certain players, but rather digitalization is a common object, a common future for the whole industry, right? We feel that we should be able to play an infrastructure to make the digitalization easier for most of the business, if not all. And it should be as much as possible. We should call for the partnership across the whole ecosystem, right? Of course, everyone will play their own view, own role, based what they can and what they are willing to and what they are competitive with, right? But overall, this is a joint game with everyone. Just now, you also mentioned another question. You say the mini service, right? On our side, we got a mini program. And this is certain things leveraging on the broad base of the infrastructure to bring everyone together, right? So this is a good example of bringing things together. With mini program, a lot of small SME service providers, they are able to easily bring their business to the online world and reach out to a much broader customer base. And even among the users, right, they are easy to pass the mini program to each other. I can share a personal example. I just recently traveled back to China. When I landed there, when I need to go through the quarantine process and when I need to go for certain local services, I just simply ask for the friends what I should look for, and they say just look for mini program A, mini program B, mini program C, and then you are sent. And it's the same thing, or at least we hope it could be the same thing in the next couple of years, right? And then we also hope Tencent would be able to play a part, or even just a small part of this process to help not only the domestic market, but also the international world to move into a more digital in a positive way, right, for the digitalization. That's my thoughts.
Thank you. Thanks a lot, Wen Hui. And I think the concept that I think you nicely borrowed Olympics of faster, higher, stronger, and together is also quite aligned with how MAS ourselves we view this coming few years. This very challenging coming few years. To sort of summarize what you said, I think things are transitioning towards a very intelligent information economy, but also a very holistic kind of economy, right? Where services aren't piecemeal, but you try to string together essential series of services or micro programs, I think as we call them, which are essential for different clusters of SMEs or different clusters of businesses themselves. I think there's opportunities for service providers to see what gaps there are that could be provided. And on the flip side, for businesses, I think they can focus on their core competency where they are making their business, making their money, and then leverage on these service providers to help them solve these more important but day-to-day issues, right? From our end in MES, I think we've started this initiative initially called Business Sense Borders, which was the aim of how we can connect together different ecosystems and different service providers into a single sort of intelligent hub itself. And what Tencent has embarked upon is probably something we are quite keen to see whether there are future partnerships. But from a conceptual basis, what we are looking at, I think it's quite similar to what you just commented could be the coming future, where for a small business itself, when they plug into a larger ecosystem, whether Tencent's ecosystem or any other provider's ecosystem, not only are they able to connect to other ecosystems, for example, through MAS Business Sense Borders, now it's called Popstera Initiative, to link to other platforms around the world. So one-to-many connectivity. So that's a big concept that we're driving. The second is it's an end-to-end kind of service. So not only you get payment services, as you already pointed out, you can do your invoicing with government, you can get recommendations, you can find new business partners, and if you need to buy tickets to travel, there's also something you can do. So this, I think, like a one-stop kind of service is the direction we feel things are moving, and that's what we want to build together with global partners themselves. And then I think you guys on your end, you're building other key essential financial services, right? On trade finance, on Forex, which are very essential for businesses that want to go global, that want to connect the rest of the world, that want to diversify. So I think this is a very major undertaking, because whenever you want to connect two companies, there's a lot of effort itself. I've seen integration work that takes many months, but it might need a redesign thinking, change in thinking for one-to-many connectivity, because that can simplify, that can really multiply the efforts and bring the real benefits, I think, to the ultimate users, your businesses, your SMEs. So very excited to see how things will change, and looking forward to these developments. I think over the last half an hour or so, we've shared a lot, and a lot of your thoughts, a lot of initiatives. Maybe I'll just give you the opportunity, if you just like to close up and highlight some of the really interesting points you raised.
Okay, sure. Thank you, Eugene. Indeed, just now what you introduced is something very exciting, right? Tencent being one example of those Chinese platforms. We believe that there are more and more Chinese platforms who would be able to play a role more in the international side. And there was advice, suggestions, and initiatives from MAS and the other regional regulators certainly would be very helpful, right? And in a way, whenever we do, right, or whatever we do, we should always look at the framework set by our regulators. On the other hand, we should always work very positively and actively with our regulators to find out what are the new areas to do. The interconnectivity, not only on the payment, but on the broad base of the digitalization, is certain things we are committed to. And to conclude what we just discussed, or rather to share some of the last thoughts on this particular topic, there are a few things. First of all, indeed, we hold vision, value for customer, and tech for good, right? Digitalization heavily leveraged in technology, but we should understand technology should play a role in good way. That's very important. The second thing, we feel that the digitalization for SME and for ultimately for all the businesses, right, is going to be a long process. It's not a one-time effort, right? So you get it done, no. It's rather the mindset. Everyone should hold the mindset. We don't have to be afraid of it, right? Let's say the only thing unchanged is change, right? So we need to understand, since it's coming, let's see how can we better raise this opportunity and make things better. Make things better for our businesses, but also make things better for the overall society and the customers. So the mindset is. Then the government or public sector and private sector should always put their role together, right? There are certain things private sector should work more, right? And we can spearhead certain things. On the other hand, we also seek the guidance, right, from our private sector, especially from the regulators, right, which will help us to jointly create the future for the whole system, right? And particularly for certain business like ourselves, we still feel the start small, think fast, learn fast, and think big would be an important approach to go. Ultimately, we hope that our digitalization will just be like the Olympics, right? So it's a happy game so that everyone can play, right? It's not about the win or lose. It's rather about we have fun through the digitalization and we make things better.
Fully agree. And how do we all move forward together, right?
Yeah, exactly. Yeah.
So thank you so much, Moon Hui, I think, for sharing your thoughts over this last half an hour. For the viewers, if you want to connect with Moon Hui, I think his details are in the details below. Where if you want to contact me from MES also, please do reach out to us. Thanks so much for participating in this very nice fireside chat, and we look forward to seeing you again coming soon and partnering with you again.
Thank you very much, Eugene, for this fantastic opportunity to share some of our humble views about this particular and a very exciting topic. And again, Tencent, we remain very positive and open to this topic. And just feel free to reach out to us. And we hope and we believe we will make something different. Thank you, Eugene.
Good morning. My name is Huan Thi, and I'm head of operation at the SME Finance Forum of the IFC. The SME Finance Forum is a global network of SME-focused financial institutions and fintech companies that promote exchange of knowledge, good practices, partnership, and thought leadership in the area of SME finance. Today is my privilege to host this panel discussion with expert panelists who will shortly introduce themselves. In this session, our discussion focuses on how SME can access sustainable green finance in the green economy. And as we know, SME play a very important role in job creation, in economic development. SME represent more than 90% of all businesses and contribute more than 50% of GDP, especially in emerging countries. And therefore, they themselves are essentially the economy. From that perspective, to fully achieve the sustainable development goals, it's important to have strong contribution from the SMEs. And that's why green and resilient SME is key to fully achieving the SDG, and help them transition into green is key. By definition, transition is a process which is often complex, takes time, require expertise and investment, all of which SME generally don't have. And this is why today's discussion is really important. How SME can access to those resources, especially green finance, so they can transition and become greener and more sustainable. I'm pleased to introduce our panelists today, Mrs. Amy Chung, CEO of Container Printer, Mr. Michael Nato, Director of Finance Hub of the UNDP, Mr. Eric Tam, Managing Director and Head Group Commercial Bank of UOB, and Mr. Kiefer, Global Head of Trade and Working Capital of Standard Chartered Bank. Before we start our discussion, I'd like to ask our panelists to briefly introduce themselves and their institutions. May I ask Amy to briefly introduce yourself, please?
Thank you for this opportunity. My name is Amy Chan, and I am the Chief Executive Officer of Container Printers based in Singapore. We started our business since 1981, where we were just printing and producing the humble square tin cooking oil can for the edible oil industry. We have deepened our skills both in the metal and flexible laminate structures over these years. And we have now managed to sell across the world. We not only sell in Singapore, but we sell all the way to Ireland, Mexico, and New Zealand, to almost 30 countries. Our portfolio consists of leading and global brand names. We work together with them to ensure product safety, reliability, and quality. The brands that we work with are in the areas of pharmaceutical, medical device, healthcare, food and nutrition, and personal lifestyle industry. This is a short introduction of myself and the company. Thank you.
Next, may I ask Marcos to briefly introduce yourself and the finance hub of the UNDP that you manage?
Thank you. Thank you very much, and good morning, everybody. It's a pleasure to be here. My name is Marcos Neat, and I'm the director for the United Nations Development Program Finance Sector Hub. UNDP is the largest development agency in the UN system. And within the organization, I have the pleasure to lead a team whose job is to figure out a way by which we can align flows of public and private capital to the Sustainable Development Goals in the Paris Accord. We are aiming to align about $1 trillion over the next 4 years to the SDGs and the Paris Accord.
Thank you, Marcos. Next, may I ask Eric?
My name is Eric Tam. I am the group head of commercial banking for UOB. I cover SME business principally in the Asia, from northern China down to southern Indonesia. The SME business is one of the core business segment of UOB, and happy to say that we have been voted the best SME bank or bank for SMEs by Euromoney Global Best, as well as Best for Asia Pacific by Asian Banker. Now, UOB takes ESG priorities very seriously, and this is reflected in the way our bank has structured its senior leadership team. This year, a Chief Sustainability Officer has been appointed by our group CEO with the formation of a dedicated sustainability unit. Together with a group of senior leaders across the bank, our sustainability program are steered towards the goal of lowering UOB's carbon footprint. At the same time, we strive to scale sustainability efforts through our clients' network and take a long-term view to shaping success with them. A key area of growth lies in the seizing of opportunities in green financing. Through this discussion, I will be sharing more about how UOB takes a holistic approach to sustainability with our SME clients by simplifying it for them. Thank you.
Thank you. Kai, now your turn.
Hi, good morning, everyone. This is Kai, Global Head for Trade and Working Capital at Standard Chartered. Standard Chartered is uniquely positioned to address needs in the SME space and the sustainability space with our footprint. We operate in 56 markets globally, and most of them are emerging markets where the need for sustainable finance is critical. Connecting the West and the East, that's what we're all about, and also leading with technology. And that's critical, important to what we discuss here today. How does technology help with green and sustainable finance? Looking forward to our discussion.
Great. May I continue with you then? So before we start the discussion, let's get on the same page. What is green finance? And what are the different types of green loans or green products that's available?
Yeah, that's a great question. I think you already mentioned the issue, getting on the same page. There is not a single definition for sustainability and sustainable finance. There are actually 400 assessment techniques out there. And that's one of the problems you face when we talk about sustainable trade finance. We believe in Standard Chartered that we cracked the code by coming up with a very clear framework on definition on sustainable trade finance, which is so important to differentiate what is green, what is sustainable, and what is not. So let me try to compartmentalize that difficult topic of defining what green financing is. So we have a technique for sustainable supplier financing. What it does, it provides an incentive to supplier, and particularly in the SME space, to become green, to become with an improved ESG rating, to improve the way how they produce and from where they produce. There's another framework out on sustainable end use. The end user, for instance, renewable energy, water treatment, that's easier to understand because it's clear you finance something where the end use, I mentioned renewable energy, solar, etc., is there. That's another technique. And then there's, of course, a transition industry. Transition industry are moving from, let's say, coal to solar, from energy consumption, fossil fuels, to a lot more sustainable future. That's the third technique. But what excites me the most is closest to my business when we talk about green financing is a transaction bank itself. So before we go there, just try to understand with me what the transaction bank is. The transaction bank is financing goods and services from one part of the world to another, interregional shipments. In Stanchart, we process more than 3 million of transactions every year. We are the #1 flow trade bank in the world. And if you hear the sheer number of 3 and more million of transactions a year, it explains the issue of sustainability in itself. It is that hamster wheel I've talked about, which keeps turning every day with hundreds and thousands of transactions. So how do we know that something comes from a sustainable source or not? Banks in itself are not the expert. So what we have done, we've developed a framework which clearly articulates for the transaction itself, whether this is a sustainable transaction, is a transaction we want to finance under our sustainable code. And how do we do this? We've partnered. We've partnered with the industry bodies who provide certification. And if you want to address, for instance, deforestation, there are 4 main drivers in deforestation. It is timber, it is meat, it is soy, and it is palm oil. That is 80% of deforestation. So by teaming up with the RSPO, Roundtable for Sustainable Palm Oil, or Roundtable for Responsible Soil, there are certification bodies which issue for the right producer with the right environmental rating these certificates. And we found a mechanism to build this into our transaction flow, into the hamster wheel I've talked about, and giving the visibility on the transaction itself. Unlike a lending situation where you have time to make your assessment and your due diligence with your client, in the transaction bank, the millions of transactions I've talked about, you need to make fast decisions. Financing is provided within hours instead of a long due diligence. So this is where the certificate comes in. I've just mentioned 2 of them. There's the Cotton Initiative, the Better Cotton Initiative, and many other certification bodies. So what we have done, adopting the knowledge and the certification process into the transaction bank. And we believe it's a unique proposition. We want to bring this to everyone, to adopt this technique and provide more financing, green financing, where it's needed, where our clients benefit from the financial solution we provide. Because the reality is, if you are in the palm oil business and you are in Indonesia and you have the choice to have your family starving, or you burn the rainforest in order to grow your plantation, that is when the monetary aspect comes in. This is when the physical supply chain merges with the financing supply chain. We are setting a financial incentive to do the right thing. And again, we've launched that proposition beginning of the year, Team Trade, very proud of you in Standard Chartered. And if you want to learn more, we will certainly discuss later a little bit more about this, and also the help we need from our friends on the fintech side. We will come back to this later. If you want to learn more, go onto our website, and look into the various aspects I've just mentioned? It's a great question, but as you can see from the answer, it's a rather complex question. It's really important to bring it down to the ins and out, and the ins will grow. We want to be very stringent, particularly in the beginning, but with the framework we have launched, I think we provide the guidance to ourselves and to our clients for what constitutes sustainable trade finance.
Great, it's very detailed. Thank you so much. We're gonna go back to that issue a bit later. But as I mentioned earlier, green and resilient SMEs are really essential in achieving SDG. And why green finance is good for, why it's good for SMEs. And how do they get started and how do they qualify for green finance? So if I could ask Eric to perhaps address this question.
Smaller companies, they are usually strapped for resources. And they're fighting for survival almost every day. Most of them will be struggling with trying to understand this very new mega trend on sustainability or green financing. So if you ask SMEs, what is green financing? Why is it green financing relevant to them? Most of them would probably will be unsure as to how to respond. I'll come to that later because we have done a survey of the SMEs and we'll come to that later. But at this juncture, I'd like to elaborate why is it green financing important for SMEs? Now, the governments and consumers are paying close attention to the effects of climate change and how businesses respond because they possess the size and influence to create impact of scale. As you pointed out, SMEs are the backbone of most economies. So if we can help the SME to transform, the impact is significant. So government and consumers are watching this space. At the same time, shareholders and customers are becoming more conscious of ESG issues and are shifting their investment, the smart money, and purchasing decisions to companies that are aligned with ESG goals. So investors are increasingly choosing to contribute to ESG objectives while also seeking returns. So I would just like to quote a carbon dated study in 2021, which looks at the risks and opportunities for suppliers, most of them are SMEs, in emerging and fast-growing markets as large corporates transition to net zero. MNCs expect to exclude 35% of their current suppliers as they transition away from carbon. 35% of the current supply chain may be cut off. So if you're SME, be mindful of that. The study also found that supply chain emissions account for an average of 73% of MNC's total emission. So these supply chains are generating almost 73% of the carbon emissions. 67% of MNC says tackling supply chains emission is the first step in their net zero transition, in addition to focusing on their own carbon output. That means look at themselves and look at the whole supply, the whole ecosystem. How can they cut the carbon emission? So consequently, there will be increased pressure from MNCs on the suppliers, including SMEs, to become more sustainable. The SMEs or MNCs, businesses may otherwise face risks in legal, policy, and reputation areas, even loss of business revenue. And over time, financial regulators will introduce ESG risks and returns for banks, financial institutions, and for companies. And this will mean downstream impact on access to capital and financing costs. So these are some of the reasons why SMEs have to take ESG seriously. Now, today, sustainability is but another dimension of corporate strategy, and SME must consider their role within their respective business ecosystem. What is your role in this whole business ecosystem supply chain? They have to consider their internal operations and business practices. The goals that they try to achieve, for instance, benchmarking company goals to global agendas such as UN Sustainable Development Goals. So SME, by adopting sustainable practices, SME will be able to seize new growth opportunities and revenue streams, benefit from government grant schemes, as well as enhance reputation as a sustainable business in the long term. So SMEs can start by working with partners such as UOB or Standard Chartered Bank, and industry specialists here with us today, in taking their first steps towards sustainable business models. So it is important for SME, the long and short of it, to get to engage sustainability practices, and that is not a view of the corporates, it's for your own survival, for the SMEs to thrive, in fact, to start engaging sustainability practices. Thank you.
It's important for SMEs to engage and to kind of transition to become green and more resilient. The important, the benefit is there, it's very clear. So let's hear from Amy. Amy, you've been in this business, for at least the business been here since 1981. What's your experience as an entrepreneur, as an SME, in obtaining green finance?
Yes, the company has been around since 1981, but I have only assumed this position since end 2012 to 2013. Now, when I came on as the CEO in 2012-2013, I had then a very deep impression in my mind of the SARS outbreak. And I realized that, you know, with the increasing climate change effects and the trend towards ESG, it was important for us to stay resilient in the business, taking into account the disruptions that we can never predict, but we need to be able to prepare for it so that we stay resilient and a valued supplier to our own existing client portfolio, besides making sure that the working environment for the workforce in the company does not feel the increasing impact of the climate change. So at those early years, you don't get such a coordinated focus on climate change nor sustainability. So it's very encouraging for me to see that banks and governments now are really also focusing on this and have organized and allocated resources with the internal team that they have set up. And as, for example, Kai had mentioned, even the definition of sustainability is so complex. So, you know, it's really good that at least they have found a way to define. And you have bankers like UOB who have now friendly programs, like a U Energy program that they have in place, that SMEs can right now go to these banks and have the initial discussion with them to work on.
Mm-hmm. You agree with the importance of green finance, and you also feel that the green finance is still quite complex, still quite new. And the question perhaps back to Kai, when you mentioned earlier, when you shared the definition of green finance, it sounds First, it's very comprehensive, but it's also very complex. I'm just wondering what are the solutions to help SME understand those kind of complex issues, right? We want SMEs to get on board and work with you to become green. And the challenge, at least based on what you describe, is very complex to understand. So tell us more. What are the way you could support SMEs in helping them understand and work with you?
Yeah, I think the first point is to be clear in what kind of technique we can provide financial support. This is the sustainable supplier financing programs. This is the end use. You differentiate yourself. Are you in a transition industry, or is this the goods and services who are certified? The 4 techniques I've talked about. But let me take a general step back to clarify the issue here, to illustrate why is it so difficult. And I think the headline for all of that is data. So even if you have the technique, even if you're very clear what you want to finance around these 4 categories, and you have the certificates within your supply chain and within your system, how does the data show us what are we financing? So for instance, we receive a transaction with the text field garment. What are we talking about? Is this clothing? Is it sneaker? Is it a t-shirt? And actually it also could be cotton. So when we looked into the hamster wheel I've mentioned earlier, the transaction bank, which keeps turning hundreds and thousands of transactions, and we receive the text field garment, it could mean a lot of items for the various parties within the supply chain. And I think that is where data is absolutely critical to differentiate the financing offering within a supply chain. Again, it's all about merging the financing of the supply chain with the physical supply chain. So what we've done, for instance, with our partners in Linked Lodges, a deep tier financing platform, teaming up with fintechs in the ESG space to exactly address the data points. Deep tier financing is critically important, in particular for SMEs, because what it does, it finances the supplier of the supplier of the supplier. So you really work backwards until you find your clothes and t-shirt in the shop, who has produced it, from where's the raw material, and you work backwards. But keep in mind that the data has to follow through, as well as the goods needs to be tagged. So there needs to be a lot of work done, my dear friends in the fintech side, to work on tracking and traceability. Token concepts come to mind. You in the fintech side, you need to partner with us in the banks. Banks like UOB and Standard Chartered, we are not so good in data, frankly. We sit on a lot of unstructured data, and I just gave you the example with Garment. You need to help us to become structured in our data to make informed decisions. We do have the framework, and again, if you want to learn more, I invite you to come on the Standard Chartered website or reach out to us. What I've mentioned before, the 4 techniques we have, that is clear. But we now need to analyze what kind of financing should be applied through what kind of financing techniques based on an informed decision on data. The verification of procurement is absolutely critical. So we need to find a way to use unstructured data in a structured manner, and we need a way to finance supply chain where we are able to track the goods down to a sustainable source. The deep tier financing only works, the deep tier sustainable financing only works if we have traceability back to the source. And that is a critical aspect where certainly banks need help. This is when the data companies, when the smart fintechs come and help the banks to provide that visibility in the supply chain, to help us using data in a more efficient way. So big invitation to reach out to us to crack the code. The framework is there, certainly, again, from a Stenchart perspective. We believe we've issued a code which is applicable for so many segments of client I've mentioned earlier. Now it's about raising the visibility within the supply chain. That is the next step and evolution to merge the sustainable financing with the physical supply chain.
Thank you, Kai. Now you mentioned the need to work in partnership with fintech. I'd like to ask a question to our friend from UNDP, Marcos. How does a development agency like the UNDP support the structuring of an enabling environment for SMEs for them to access green and sustainable finance?
Thank you. It's been a fascinating conversation because I think the scenario that both Kai, Amy, and Eric has presented, it's a scenario that is coming very fast, right? So let me give a few examples of roles that we at the United Nations Development Program are playing globally and national level to try to usher from the highest policy-making processes a concern about SMEs, because I think Eric was very important when he said, SMEs, many SMEs, on a survival mode. Everything that we're talking about here, it is not about that survival mode today. It's about the survival mode of tomorrow, right? The question is, how do you get an entrepreneur to be concerned about the survival mode of tomorrow if he or she don't know if they survive today, right? So we are, I'm the head of the secretariat of a G20 Sustainable Finance Working Group. Just on the 13th of this month, the finance ministers and central bank governors have approved a 5 years long G20 Sustainable Finance Roadmap, right? Under the Italian presidency, the working group is co-chaired by the United States and by China. Now, this roadmap, and there was a lot of conversation about, if you are going to put a regulatory framework for disclosure, if you're going to put a regulatory framework for ESG data, what does that mean for SMEs? You cannot forget that you need to figure out a way by which the biggest and greatest policy ideas have to be adapted to SMEs. Otherwise, 40% of MSMEs in the developing world today have a $5.2 trillion of financing gap every single day. If we don't adapt to this conversation that we're talking about and don't hold the hands of the SME, this financing gap is just going to increase. As Eric said, when regulators ask banks to be more concerned and be more, disclosing of their own elements on this. So for part of what we did is that this roadmap on the G20 explicitly says that we need to measure, address the challenges and benefits of sustainability reporting for SMEs. It calls for the multilateral development banks to prioritize efforts devoted to capacity building for SMEs required for greening the financial system, right? It develops a framework for financing a just and climate transition for SMEs. Now, this is the largest policy making table you can get, the G20. Now, how does that come down to the reality? So we at the United Nations Development Program, when COVID-19 came, we also realized a second issue about SMEs. It's not just a transition to a green into an SDGs, but it's a transition to digital. The SMEs that are going to survive are the ones whose business models become digital. If they don't become digital, they are not going to survive. But again, do they have the money, the capacity, the time to become digital? So we actually created with the International Chamber of Commerce, with PwC, with Microsoft, and with DHL, a global COVID-19 facility to support SMEs to digitize their business models. We are working in Ghana, we are working in Colombia, trying to, for example, in Colombia, we are piloting something called Trade Now platform, trying to digitize the entire trade exercise to close that financing gap. Second, knowing what is coming down the pipeline, knowing the demands of investors and consumers and regulators, we at UNDP went on to create what we call an SDG investment maps. We have done this in 16 countries and we're doing in 24 more now. We have produced through those maps about 215 concrete sector and subsectors investment opportunity areas. A lot of those investment opportunity areas are suitable for SMEs, right? And the SMEs are already in those sectors and subsectors. So, you know, one of the things that, an example of those maps being used to benefit SMEs is in Ghana, where we work with an intermediary pipeline developer in Geneva, who then pick up the map of opportunities that we did for the country of Ghana, all aligned with the SDGs, right? And has already structured 39 millions of SME investment opportunities for those maps. Now, Standard Chartered has been helping us on this, right? Daniel from your office in London sits on the advisory board of the SDG investment work that we've been doing. And we also created enterprise standards that SMEs can adopt it, that they would then be able to be verified, and then you will be able to say that a business model is connected to the SDGs. But that's not enough. And that's my last point of example of what are we doing here, is you really have to get inside the SMEs. You really have to hold their hands in this transition period. So we have another program called the Business Call to Action, where we created an impact management lab, right? So this lab has worked with more than, where's my number here, 401 MSMEs around the world, training them on how to pick up social and environmental indicators, how to design a report, a disclosure mechanism, right? How to integrate social and environmental indicators and business aspects into the core business. You actually have to get inside it, hold their hands, otherwise it's not going to happen. Now, in that sense, I've got UOB here, I've got Standard Chartered, and I heard Kay's call to support from fintechs. I actually turn it back, and I say the banks, right, need to actually partner with organizations like ours and others to support the SMEs, because it's not good enough to simply say, listen, guys, get your act together, because this regulatory pipe is going to come down the line, because the answer will be the answer. I lived for many years in Istanbul, and I used to go to the Grand Bazaar of Istanbul, and I used to ask for those small players, all SMEs inside the Grand Bazaar, do you know Istanbul is sitting on an earthquake fault? Do you have a catastrophic insurance? And the answer was, why would I bother? I don't know if I'm going to be here tomorrow. You want me to worry about an insurance for an earthquake that might happen or might not happen in the next 30 years? Give me a break. It's the same here. If we don't create an enabling environment that goes all the way from the G20 to national policy to holding hands with business advisory for that transformation, it's not going to happen. Thank you.
Yeah, I need to jump into this, Marcos, for your very passionate play, and I want to point to the great work the MES is doing through the financial trust work. Eugene, thanks for the partnership here. And my co-chair on the financial trust corridor, which is Tairu from Consolidated Bank of Ghana. Since you've mentioned Ghana, those are the type of initiatives which differentiate us, right? Because the financing gap you've referenced will not be matched, and we can't bring it down by having appeal after appeal. This appeal is out for like 10 years, and since then it is growing. The way how you provide financing to the SME, to the micro level required in certain trade corridors, is to create trust within that corridor. And that's again all about the data we need to have. Is it a financeable entity or not? Can the partners within that ecosystem provide the data? And that's where also the work of the MES and the central banks of both sides, Ghana, Singapore, come together and share information within both ecosystems and make something financeable. That's the only way, and that is the Ghana-Singapore corridor, and there needs to be the next corridor and the next corridor. That is how you address this. Otherwise, we will remain in the stage of looking at the trade finance gap, and it is not shrinking. We need to work financial trust corridor by financial trust corridor to crack through this. Love your appeal. Now it's time to actually tackle it. Sorry to interject myself, but it's a really important topic Marcus raised.
I'm sorry, I also have to jump in here. I find this a great opportunity in the sense that, you know, I agree with what both Marcus and Kai are saying in the sense that, you know, data is very important and also collaborating with the bigger ecosystem. That was one of the challenges that we faced at the very early years. You know, understanding who are the players in that ecosystem was one. And then we realized that, you know, data is also something that is very key. So we ourselves initiated our own digitalization. And for your information, we've got already that in place. And we realized that with the digital solutions, you can really hone in on where the root sources of the energy waste is, for example. And then you can fine tune your energy efficient efforts to those sources of problems. So I'm sorry, I just needed to come in and just speak these 2 sentences. Thank you.
Thank you, Amy. Thank you, Kai, for jumping in here. I have a question that I'd like to ask to both Kai and Eric, and you could decide who's gonna be the first to address the question. The green finance is typically, when we talk about green finance, it's associated with large projects, such as renewable energy, green building. But we know that if we are to kind of make a big impact on greening the world and reducing the carbon footprint, we need to work with the SMEs. And we know the challenge that they face already. So the rationale for green finance for the world is quite clear. But how about for bank business? How about profitability? And what market opportunity did you see your bank here in going into this space, and what do you see in the future? Who want to go first?
Yeah, I can. Since Carl has been quite active, I think I should take it up from here. Now, I think what Carl and Neto talk about is quite pertinent. It's very, very relevant in the sense that banks with resources, even with huge resources, I think banks in general are struggling. We can't do it alone. The data, a lot of the data come from outside the banks. So therefore, we have to work within the ecosystems. And Marcos is right, the SMEs we need to hold their hands and lead them. This is confirmed by a survey that we have done before we even talk about SMEs and ESG. We wanted to know how the SMEs how are they thinking about ESG. In our survey across our region, we found that almost 20 to 40%, depending on which country, whether Thailand, Indonesia, Singapore, they are not aware of ESG goals at all. And they are not even aware of sustainability issues impacting their industry and business. So it's true, there's a long way to go for the SMEs. Not all SMEs are as enlightened as Amy's container printers, where she has done quite a lot of ESG issues like energy efficiencies and the monitoring of her data. Not a lot of SMEs are in that area. And 70% of these SMEs are not seeking access to green financing at all. It's so pathetic, the proportion of SMEs. And this SME can't tell the difference between green versus non-green financing. So a lot of work to do, and what is available in the market and the type of documentation that is required. So you look at it, it's complex, but how to make it simplified for the SME so that they can come on board. So a lot of them, SME says that they will only embark on ESG if it's mandatory or regulatory requirements. So this is where we are now. All their business require them to, because they're part of supplier change. So this is where we are now. So how do we, you asked about the, how do the banks see profitability coming out of this ESG? Is it just cost? Well, we always, in UOBs, always feel that we have to take care of and nurture and grow our customer segment. And in this case, it's the SME segment, which is a core group of the bank. Now, if the SMEs cannot survive, our profitability will be impacted. So we have, for the past 5 years or 10, we have been rolling out lots of digitization programs, like what Marco said, to help them to digitize. We work with Googles, we work with a lot of fintechs, so that bring the cost to serve down and bring that relevance in terms of data mining. So the SMEs, we are having pouring resources. Now come this next mega trend, which is sustainability, ESG, and green financing. So we have invested lots of resources into how to simplify for SMEs. The large corporates have no issue. They have they know how to go about, how to engage the bank. The SMEs are the one that we need to go in. So for us, we have simplified a framework in 3 areas, which is we make it, we customize for them. We have helped them in capacity building. Oh, a lot of this is in our website, but suffice to say that their future is our future. So we therefore have worked with, but we alone can't do it. We have worked with partners and we roll out programs. On top of that, we finance them in their transformation. So it is very important for us to work with them so that they form this lack of awareness into a adoptive stance for them, and help them to integrate to this ESG for our good as well as for customers' good. So it's definitely profitability driven as well, other than the altruistic objective of having a better place for all of us.
Great. So the SME success is your success.
Yes.
So this is great. Let's hear from Kai.
Yeah, I think Eric captured a lot of how we think about the SME financing in particular. But let me give you two additional thoughts on top of this. So one, it's all about the awareness, right? It's not a nice to have anymore, and the trend we want to jump on. Net zero is real, right? If we want to secure our planet and want the future for our kids, it is real, and we need to address that. But again, I talked about the reality. If you're a palm oil producer in Indonesia, this is pretty far away from your reality right now, because you need to make sure that your family survives. So how do we bring this together? One is the awareness we need to create with our clients, and that is important because you have rules in the EU who demand now full due diligence on the sustainability business for the time you onboard a supplier, right? So that's a reality of EU rules. Meaning, if you want to be part of a supply chain, you have to get sustainable in order to qualify for European shipments. But I don't think that is a threat. That is the largest opportunity, in particular for our footprint market, Africa and in Asia, because you bring within the Western supply chain, where the consumer goods are going, where the cream is put together from palm oil, which has to come from a sustainable source. You combine the knowledge the Unilevers of the world have done and the work they've put, and build this into the educational journey and build a framework where the small farmer has an incentive to produce sustainable, to be part of the supply chain. So the education comes from the bank side, but it also comes from the larger corporates who have done their homework, who have created the awareness around it and transform that knowledge to the SMEs. The second aspect, and Eric mentioned it, it's actually the dollar and cents, because doing the right thing is not good enough if you need to run a P&L. And we talked a little bit about the survival in the present and in the future of the SMEs. And this is where, for instance, the great work of the IFC and other supranationals come in. The IFC and others have issued a program with reduce pricing for sustainable trade finance. And those are the initiatives which pay in dollar and cents in incentive to produce, to supply in a ESG rated sustainable fashion, because the benefit we as a bank receive from a reduced pricing grid for mitigating risk, we as a bank are now able to pass on to clients. So this is an actual example where you not do the right thing in terms of bringing the due diligence on sustainability to the level where it needs to be. It also gives you the financial incentive to doing the right thing. And these programs, and again, IFC and others are on the forefront of it, that has to broaden into a much larger investor base, which brings me back to Marco's passionate plea for the trade finance gap. I don't think that even the strongest SME banks in the world, UOB, us in our footprint market, are able to underwrite all the debt needed in order to finance the SMEs in the respective market. What has to happen is, we talked about the supranationals, great work, and that will continue. What I believe is we need to bring in a different group of investors. We need to find techniques where green bonds are issued, and that's a pretty robust market with an established framework, where we find an investor base and link the SMEs financing with a completely new investor base. So that is something probably for another topic, but I don't think the banks and the supranational alone will be able to gap the trade finance gap. We need the data I've talked about, and we need a different group of financiers coming in, the BlackRocks of the world, who want to do the right thing, finance into an SME segment in Africa, Middle East, and Asia, with an incentive to do ESG-rated financing on SME level. So we need the smart brains from the fintechs for data, the MAS workstream around the financial trust corridor. We need new ways how we bring in financing on SME level to a very different, I mentioned BlackRock, different investor base. That's what needs to happen in order to bridge the trade finance gap, which is out there and keeps growing, and provide the financing where it's needed with the SMEs.
Great, Kai. Anyone else would like to comment on this before I ask the last question to all of you? Okay, so the last question, let's say I'm an SME making shoes in a shoemaking business. I'd like to access green finance to grow my business. Any recommendation from all of you, including Amy, you yourself as an SME, any practical advice for an SME like me?
Well, for me, I'm still going to continue with all the initiatives that I have started. And certainly I will be speaking more with UOB, whom I've already started some discussions with on some of their sustainability programs. So I suggest other SMEs that they also quickly find the partners in their own value chain to see who they can approach and start discussions and collaboration. That would be, what I suggest going forward from here.
Thank you.
For me, I would say, don't start by looking at what you need to do to access finance. Start by looking what you need to do to integrate green social aspects into your daily core business and into your decision making. Once you integrate that, getting Kai's money, getting Eric's money becomes natural, becomes easy, right? You don't have to, bend things to access the money. You actually have to use, supports and systems and integrate impact management measurement, indicators, aspect, because then you provide the data that Kai wants automatically. So for me, don't start with the money. Start with what is the social environmental impact of my shoemaking business? What is the social and environmental return I want from my shoemaking business? Define that, integrate in your core business, measure that. That Kai and Eric are ready to give you the money once you done that. But if you start from chasing the money, it might not work.
I like that quite a bit, Marcos. I think couldn't agree more. And it brings me back to the data point. Have you, shoe manufacturer, made your homework to achieve an ESG rating? Do you know where your water's coming from? Where's your textile coming from? Where's your raw material coming from? Have you done your homework to improve an ESG rating or get an ESG rating in the first place? Because if you have done this, and certainly at that point, feel free to reach out to Stencha to advise you. But if you have done your homework, then to Marco's point, it becomes really easy to access, for instance, our sustainable supplier finance program. And that opens all the instruments which are there, which is a loan. You can even deposit money with us in a sustainable way. We can give you sustainable receivable financing, letter of credit, etc. So the financing aspect, the framework is there, but it all starts, to Marco's point, making your homework on a client level. And if you're an SME and you're not sure about, well, how does it work? How does it is executed in practice? You go to your supply chain. I mentioned the Unilevers of the world who have programs who can support you in the food industry. Go to the large retailers in the world. They help you to get onto this path. Or meanwhile, come to your banker. We can also help you there. But to Marco's point, it's all about making your homework first in order to get the financing. The green financing is there. Where we again need a little bit help is more data. It's an appeal to our friends on the fintech side. We need to crack the data code in order to make sure we are financing something traceable, visible from a sustainable source. And shoe manufacturing is an example. How does every part of your supply chain until you have the sneaker in your hand comes from that sustainable source? That is the data appeal here. Token concept come to mind, where each and every part of my raw material is traced and how it then ends in the shelves and can be recycled for an end-to-end use. So fintechs do help us.
Yeah. Sorry. Okay. Hoon, can I say something?
Yes. Go ahead.
I think Carl and Marcos and Amy, they all say very important thing, which is firstly, if you are SMEs, you are SME, you need to ask yourself, look at your internally, am I a pure play, which is where I focus on solar panel, green energy, or you are waste and water treatment company? But it's not the case for all SMEs. So you are shoe manufacturer, right? So how do you engage these ESG activities? First point, like what Marco said, look at yourself, right? Try to overcome this myth that SMEs generally have, which is that it is costly to engage ESG matters. It's not true. If you look at the examples of Amy, container printer case, she looked internally and she engaged in ESG activities, cutting down energy consumption, putting in place a measurement, a digital measurement of the energy consumption. And from that data, she even, like Carl said, the data she even know where and what is happening to the whole value chain in her manufacturing activities. And she traced, probably engaged, make sure the suppliers are certified furnace to supply the raw material to her, so that the whole value chain, she looked at it. And from there, she could then get access to market where the MNCs will say, you are one of those certified or green practices supplier, you're on board, and I will give you more orders. And that is a key incentive for SME to engage. It's not cost. In fact, by going through energy savings and sustainable practice, your internal cost to serve actually probably came down, but you have access to market. So this message must go out to the SMEs. And it's also not just the large corporates can do it. The large corporates they look at it, but they also need suppliers. And the suppliers, you and the large corporate work together, the whole value chain, you are part of it and you gain as well. So I think the first thing SMEs have to have a change of mindset is your survival in the future, actually. Not so and how to do it is the other question, which is go for partners or go for the resources in the ecosystem. Stancha has a good data. Stancha has a network. UOB is strong in ASEAN, and we have the network. We put in a lot of money to make it simpler ESG framework for you guys, SMEs. Come to us. We will help you to assess, help you advise you on the assessment, advise you on how you're going to prepare the disclosures and the outcomes that are expected of it. And we don't do it alone. We have fintechs, we have the eco partners, the MAE contractors, and the rest. So I would like to just to as other than the container printers area, we also come across SMEs who are in the traditional business, a construction company. He has recycled the asphalt. He has look at demolition waste and reuse it and build a new factory which is 15% more efficient in terms of energy output. In fact, net contributor. So this company is like Sangwo. There's some of this, and we have car fleet owners. They are all changing from petrol, gasoline to electric, and we issue securitization bonds for them or financing for them, where encourage them to go into green, and there's an incentive for them as well. So these are some of the things that, because the smart money will want to buy these bonds, and he has access to capital and cheaper finance. So these are some examples that the shoe manufacturers know the source of your raw material. Where do you get the leather, the thread, and where the workers are they in compliance with the Labor Act and all this, the whole process. And if you don't know how to go about, come to the two banks here. We will help you to walk the journey. That's very critical. Thank you.
Great. Thank you so much for this really fascinating conversation. And thank you to all of you, Amy, Eric, Kai, Michaels, for taking the time to share your insights and perspective. This is a very important topic, and I hope there will be more discussion around this topic going forward. And also thank you, the audience, for joining us. Thank you.
Hi, welcome to the Masterclass on Digitalization for Successful Business Operations, What You Need. As the good book says, without good advice, everything goes wrong. It takes careful planning for things to go right. So every business wants to achieve success, but few are ready or know how to take the plunge in this new normal, particularly with the COVID-19 situation and what we're experiencing. So in this age of digitalization, what must companies do to adapt? How does one deploy good techniques with a dose of, I use the word, uncommon sense to achieve business success? What are the skill sets that are needed to help your employees and yourself to take on this journey? So what does success look like? So in this class, I'm going to share with you the what, why, and how of effective digitalization for companies. Whether you're small, medium, or large enterprises, I hope that this practical down-to-earth session will help you kickstart the digitalization journey with less pain and angst. Right. Hi, my name is Patrick Tung. I'm from the School of Computing and Information Systems at the Singapore Management University. I'm a director of the highly ranked Master of IT in Business